Hi friend, glad you're back. In this video, we're going to talk about customer deposits or customer prepayments in QuickBooks Online. Here's the situation we're solving. Your client pays you before you perform the service. That money is not revenue yet because the work hasn't been done. It's a prepayment for future services. You'll see this most often in a few industries like contractors and construction, where the client gives you upfront deposits before a job starts. Consultants and service providers sometimes sell prepaid projects or packages. And because of an accounting rule called revenue recognition, we have to be careful how we record it. QuickBooks gives us two correct ways to handle this. And today, I'm going to walk you through both methods step by step. So check out the timestamps in the description if you want to jump ahead. What is revenue recognition? Well, it simply means this. You only record revenue after you perform the service or deliver the product. Just because you invoice a client or they pay you does not mean you've earned that money yet. If you never perform the service, you may have to refund it. So until the work is done, that money doesn't belong on your income statement. There are two common ways to handle customer prepayments. Method 1 is the Negative Accounts Receivable method. Method 2 is the Current Liability method. So let's start with method 1. With a Negative Accounts Receivable method, you receive the customer's payment before creating an invoice. QuickBooks records that payment as a customer credit, which creates a Negative Accounts Receivable balance. So later, when the service is completed, you create the invoice and apply that credit. This method is simple, but it has some downsides. So here's our example. The customer is Jackson Industries. The service we're selling is construction services. The income account we're going to point it to is services income. The total job is $7,000. The customer pays a $2,000 deposit in January. The work is performed in February, and the remaining $5,000 is paid in March. Let's go to QuickBooks Online. First, we receive the deposit. So click plus create, then receive payment. Choose Jackson Industries. You'll notice there's nothing down here. And even if there were invoices down here, we do not apply this payment to any invoice. Let's enter for the date January 21st. Amount $2,000, and we received it as a check. And for simplicity, we're going to deposit it directly to the bank. In the memo field, let's type $2,000 down payment for February construction services. Now, QuickBooks will warn you that there's no invoice to apply the payment to. That's expected. And honestly, this is one reason many of us don't love this method. There is no invoice document tied to this deposit. And I have a problem with that. While this method is allowed, there's no formal paper trail showing why the customer paid you. So what happens on the balance sheet? Let's go to reports and find our balance sheet. Accounts receivable now shows negative $2,000. I highlighted the negatives in red for emphasis. That negative accounts receivable is effectively a liability. The cash is in the bank, but you haven't earned it yet. Here's another reason why this doesn't sit well with me. Accounts receivable is supposed to represent money customers owe you. A negative accounts receivable means the opposite. It means you owe the customer. So now we're using an asset account to represent a liability. Yes, QuickBooks allows it. Yes, it technically works, but it blurs the meaning of the account. We're going to move on anyway. So let's create the invoice. Click plus create, find invoice. Add Jackson Industries. The service was completed on February 1st. This is for construction services, which will go to the services income account, and it's for $7,000. Don't mention the deposit on the invoice. This invoice stands on its own. This is how you recognize revenue. Save and close. Let's type in that customer in the search bar. Let's look at that invoice and check our work. So QuickBooks automatically applied the $2,000 credit. Now let's check the balance sheet by month. Accounts receivable shows $5,000 under February, which is what the customer still owes. So how does this impact the income statement? On an accrual basis, revenue is recognized in February when the invoice is created. Let's switch over to cash basis. In cash basis, revenue follows the payments, okay? So $2,000 shows in January. This method created something called Unapplied Cash Payment Income. Unapplied Cash Payment Income is a system account that only QuickBooks uses. You can't post to it manually, and many bookkeepers, including myself, don't like seeing it. This appears when a payment isn't attached to an invoice, because remember, we invoiced in February. Now let's receive the final payment of $5,000. So click plus create, click receive payment, choose Jackson Industries. We're going to date it March 1st, and this is a check for $5,000. And it's going straight to the bank for simplicity's sake. Record and close. Let's run the income statement again and let's check our work. Be sure your dates cover January through March. Let's look at it by month. Again, on an accrual basis, revenue is recognized in February when the invoice was created. On cash basis, on the other hand, the remaining $5,000 shows it was paid in March, and our total of $7,000 is accurate. By the way, if we haven't met yet, I'm Catherine Silverio, owner of Silver Bullet Bookkeeping. If you're a business owner and you need help with your books, call, text, or email me and let's schedule that free discovery call. Now let's look at method 2, the cleaner approach. Method 2 is the current liability method. This is the method I prefer. Instead of negative accounts receivable, deposits go into a customer prepayment liability account. Revenue is recognized only when the work is performed. No unapplied cash payment issues, cleaner reports. It does take more setup, but it's worth it. First, go to your chart of accounts. Click on the gear icon on the upper right corner. Find Chart of Accounts. Create a new account called Customer Prepayments. The account type is Other Current Liabilities, and the detail type is Deferred Revenue, and this account holds money you owe clients in future services. Next, it's time to create the prepaid service item. So, go back to the gear icon. Under Lists, click on Products and Services. Create a new service called Prepaid Services. Set the income account to Customer Prepayments. And remember, it really isn't an income account, it's a liability account. Yes, QuickBooks calls it an income account, but in this case, it posts to the balance sheet, not the income statement. Oh, but we're not done here. It's time to create the actual service item. We're going to create another service called Consultation Services. So click on New, then Service, and we're going to call this Consultation Services. And this one posts to Sales Income. This is what actually recognizes the revenue. And hit Save. We're now ready to invoice the customer for the deposit or customer prepayment. So let's click plus create. Click on invoice. Choose XYZ company and let's date it April 1st. For product or service, let's choose prepaid services. Let's say this is for 10 hours at $100 per hour for a total of $1,000 and no taxes for this. Hit save and close. Now let's check our balance sheet, and we need to be sure that our dates are correctly entered, and this is for April. The balance sheet shows accounts receivable for 1,000 and customer prepayments for 1,000. Let's check the income statement. You can get there from the balance sheet by scrolling all the way down, click on net income, and here we are. So this $7,000 services revenue was from Jackson Industries earlier. The $1,000 we just entered isn't reflected here yet. Let's receive the payment and apply it to the appropriate invoice. Click plus create, choose receive payment, choose XYZ company. Let's date it May 1st. For simplicity and for the sake of this lesson, deposit the check directly to the bank. We're going to skip undeposited funds. Click on that invoice. Hit record and let's stay on this page. Click More and understand what happened behind the scenes by clicking Transaction Journal. Now you'll see accounts receivable is 0 because we credited it. The bank balance increased by 1,000. Now let's check the balance sheet by month from January all the way through May. Customer prepayments shows $1,000. And now let's switch over to the income statement, display columns by months. Still no new revenue on the income statement. It's time to recognize revenue and you get 2 options. Option A is adding a negative line on the invoice. So let's click on plus create, choose invoice. Let's choose XYZ company. Let's date it June 1st. And this is for consultation services. And remember, this service points to the sales income account. We provided 2 hours of consulting at $100 per hour. That makes it $200. On the same invoice, add prepaid services. Remember, that service actually points to a current liability account called customer prepayments. Now, for the amount, we're going to put in negative 200. This negative number is crucial, my friend. This will drop the liability to $800. Save the invoice. Now the revenue is recognized. So just a quick reminder, there's no receive payment step here because the client already paid us earlier. This step is strictly about recognizing revenue, not collecting cash. So let's check our reports. Let's go to the balance sheet. Let's check that our dates run through June. Let's scroll down and let's check out customer prepayments, and that drops to $800. And let's switch over to our income statement by clicking on net income on the balance sheet. And as you can see, the income statement recognizes the $200 sales income. Option B is to use a credit memo. First, we need to set this up. So let's create a new invoice for XYZ company. It's for consultation services again, for 3 hours this time, and let's date this July 1st. Save and close. Click plus create. Under customer, find credit memo. Choose XYZ company. Let's date this August 1st. I know we're going to have a long income statement, but I want you to see how this plays out by month. The service is prepaid services, $300, no tax. Remember, prepaid services points to the current liability account, customer prepayment. Let's check this customer and see what's happening. You see, QuickBooks applied that credit memo to that invoice. Same result, just a different workflow. Now let's check our reports. Let's check the balance sheet all the way through August. Let's scroll down, and now the customer prepayment is down to $500. And the income statement shows $500 in sales income. So that, my friend, is how you account for customer prepayments or deposits in QuickBooks Online. You've seen both methods, the negative accounts receivable method and the current liability method. Let me know in the comments which one you prefer and why. There you have it. If this was helpful, give it a thumbs up and subscribe for more bookkeeping tips, and because it makes me happy. And if you're not ready to leave yet, click the video I handpicked just for you.